Oh, why, everything. Policemen, trees, sunshine. And let's not forget the folks who just don't feel like working, God bless them.
Ah, taxes. The price we pay for freedom. Because nothing says liberty quite like handing over a chunk of your paycheck to fund a government that may or may not remember you exist, depending on your tax bracket. And while we're at it, don't forget the folks who just don't feel like working. Those phantom freeloaders we're supposedly supporting, even if we're too busy working double shifts to ever meet them. In The Trouble with Trillions, The Simpsons rips through this all-too-familiar storyline, exposing a tax system that's less about fairness and more about funding a bloated, bureaucratic mess by teaching us how to commit tax fraud ourselves. Which raises two big questions. Are we just paying our dues for faculties we can't live without, or are we feeding a machine that's grown too big to serve anyone but itself? And what does The Simpsons teach us about avoiding these taxes? The episode starts off on New Year's in Springfield, where everyone is celebrating a sphere of mud, rocks, and water having made another loop around the sun. But if there's one party that gets to celebrate the most on New Year's, it's the IRS. Once another year has passed, your yearly tax returns are finally able to be filled in again to allow for more unnecessary spending by the government. Woohoo! Ned realizes this and starts off January 1st by doing his taxes.
Oh, January 1st. Better get going on those taxes, Nettie.
Which should be quite easy. The IRS knows how much you made last year, so they will just send you an insightful report which explains how much you owe them or how much they owe you, right? Well, nope. You have to do them all yourselves. That's where you check all your expenses and justify counting them as business expenses, just like Ned.
Let's see, cash register ink. Well, that's a business expense, isn't it?
But then his daughter asks,
Daddy, what do taxes pay for?
which is a good question. According to Ned, it's for policemen, trees, sunshine, and the folks who don't like working. But how much of that is actually true? Is it really just a case of Americans clutching their wallets and shrieking at the sight of Uncle Sam's hand reaching in? Or could it be something more profound? Maybe even justified? I mean, the anti-tax crowd would tell you it's an age-old American instinct. Nothing unites people like a good old-fashioned tax rebellion. After all, this country was practically founded on the right to tell a monarch to keep his hands off our money, and of course, our tea. But then there's the other side. The taxes are the price of civilization team. They'll tell you that without taxes, society would collapse into some sort of dystopian free-for-all. But without taxes, who would fund all those essential services we rely on every day? You know, roads, bridges, and putting fish on treadmills? Yes, that actually happened. But here's the balanced truth. Taxes do pay for a lot of the services we have that most people aren't aware of that they're benefiting from. It's also why, generally speaking, people above the age of 60 think taxes are fair and younger ones don't. And it's easy to see why. Older people perceive more benefit from where the taxes are going, like pensions and publicly available services. Young people don't think they benefit from them when they do so unknowingly. A 2008 Cornell Survey Research Institute poll showed that 57% of respondents said that they had never participated in a government social program. However, 94% of these same respondents reported being the beneficiary of a program provided by the state, with the average participant benefiting from 4 government programs. It's easier to hate something you have no understanding of when you feel like it's hurting your wallet. Then again, using taxpayers' money to fund studies on fish on treadmills and proving that frat brothers like to party, which had an allocated budget of $5 million, might not be spending the funds in the most beneficial way for society. But that's not the only problem with the American tax system like we see in The Simpsons. In Springfield, everybody is jumping on the possibility to file their taxes.
All right, people, listen up. The harder you push, the faster we will all get out of here.
And like most Americans, it's only very busy because everyone is doing their taxes last minute.
Sir, why did you wait until the last minute to pay your taxes?
Because I'm an idiot. Happy?
Except Homer. He isn't all too worried about paying taxes. He already did them last year.
Will you look at those morons? I paid my taxes over a year ago.
But then Lisa has to tell him he has to do those every year. Now, the way Homer does this isn't too far off from a normal American.
Marge, how many kids do we have? Oh, no time to count. I'll just estimate. 9.
He's on the way to the IRS most wanted list, one deduction at a time.
Okay, Marge, if anyone asks, you require 24-hour nursing care, Lisa's a clergyman, Maggie is 7 people, and Bart was wounded in Vietnam.
Which would land him medical expenses deductions, clergy housing allowance exemptions, dependent exemptions, and veterans benefits or disability deductions, at least if it were true. The Simpsons just uses these examples for comedic effect of how the tax system works and shows us how to commit tax fraud, albeit poorly. If you want to do it right though, I'll get on that later. First, we must understand the problems with the current system. Or is there anything even wrong with the current system? Well, yeah, a lot. It's comically difficult to navigate on purpose. If the tax code were simple, would anyone really need the IRS breathing down our necks? Or the 6 million accountants it takes to decipher tax forms that feel like a cryptic puzzle or if this then that statements? Let's start with the sheer size of it. The US tax regulations is over 70,000 pages long, and yes, you heard that right, 70,000 pages. That's longer than all 7 Harry Potter books combined, and spoiler alert, it doesn't end with a neat epilogue. Instead, it ends with most Americans wondering if they're one missed deduction away from a random audit. And if that weren't enough, there's the gotcha language. The tax code is practically written in a dialect nobody speaks, legalese, with a dash of mystery. Terms like alternative minimum tax, excess losses, and miscellaneous itemized deductions sound like they belong in a bad game of Mad Libs. But in reality, they're just the IRS's way of saying, good luck figuring this out without professional help, which is exactly what they want. Tax prep companies, accountants, and even software makers thrive on this mess. Ever wondered why they haven't pushed for a simpler system? Well, because of capitalism. Take companies like Intuit, the creators of TurboTax, and H&R Block. In 2003, they cut a sweet deal with the IRS. In exchange for offering a free filing option for lower-income Americans, the IRS agreed not to create its own free filing system. Earlier in 2019, thanks to a little extra lobbying, Congress almost made this agreement permanent. It's a free option that only 3% of eligible people actually manage to use, since tax prep companies like TurboTax and H&R Block went out of their way to bury it in search results and misleading links. It's not like those 3% would pay that many taxes anyway. So we've established it's quite the bureaucratic maze and mistakes can happen, right? Well, let's see what happens if Homer makes a mistake. Homer uses the same strategy he used for filing in his tax returns to deliver them.
If I don't see it, it's not illegal.
Whatever he isn't lawfully aware of, he cannot be punished for. He throws his tax forms into the delivery bin like a three-pointer and makes it at the last moment.
Punch it in there, drop.
Woohoo! Go!
Then business is back to normal. Until his tax returns drop onto the pile of severe audits, where the IRS discovers his fraudulent forms, leading us to the next scene where Homer is sitting around at Moe's Cafe only to be kidnapped by the government.
Homer Simpson, United States government.
Help! Somebody! Help!
Then, held by the government, Homer says he will do anything to stay out of prison. After getting asked if he really thought he could fool the government, he answers,
No, sir, I'm really sorry, sir. An older boy told me to do it.
his punishment?
You're looking at 5 years, minimum.
Here's where The Simpsons goes off topic for a bit. Homer pleads he will do anything and is subsequently hired by the government to spy on Mr. Burns, who might be in the possession of $1 trillion dollar bill. Homer agrees to spy on him, but on one condition.
Okay, but could you pay me under the table? I got a little tax problem.
As you might expect, this is not what actually happens when you commit tax fraud. I think. I've never tried it myself, but if you have, please let me know your experience in the comments section. For now, what actually happens when you make a mistake filing your taxes? Well, it's not like this Twitter or X post, though it humorously summarizes the way Americans view the tax system. The government knows how much you generally should owe, but they don't tell you. They just want you to make a calculation so that it could be in their favor. But if you make a mistake that's in your favor, oh boy, you go to jail and never get out. Well, no, not really. It all depends on your situation and the scale of it. Very few taxpayers actually go to prison over committing tax fraud. The IRS usually looks at the intention you have behind it. Homer knows this. That's why during his tax forms, he doesn't want to hear anything from anybody.
Shut up. If I don't hear you, it's not illegal.
He applies the same principle with driving through a red light, though it doesn't work that way. Common sense also comes into play. Homer should know his 10-year-old son is not a war veteran. Neither is his daughter actually 9 people. There are smaller mistakes that can happen though. One of the most common mistakes is a simple math error. You'll have to spot this yourself though and file an amended return. If you don't do that, you may be charged with penalties and interest even years later. Luckily, if the government makes an error, they face the same consequences. Yeah, right. They didn't even have their own accounting done right in 1992. The first time the IRS ever got audited by the General Accounting Office, the Associated Press stated, "The IRS system for administering its own money was so bad that auditors were unable even to review 64% of the IRS's $6.7 billion budget in 1992. In auditing the IRS's cash accounts, the GAO also found unresolved differences of $63 million. In response, the IRS's chief financial officer at the time, Morgan Kinghorn, explained the IRS had been using an old system of accounting that just was simply not auditable and not designed to be auditable. But now the IRS has a new system, and the CFO guesses it will be okay next year. So from now on, if you have any problem with the IRS and the amount in question is $63 million or less, simply state your accounting system was not designed to be auditable, but that you have a new system and that your guess is that everything will be okay next year. Also, something you should keep in mind, the IRS doesn't accept checks for more than $100 million. So split your returns in multiple checks if it exceeds that, or pay electronically. But it doesn't just stop there with the IRS causing problems, as we see in The Simpsons. After Homer agrees to help the government, he's asked to spy on his friends to see if they've ever been involved with illegal activities. Luckily, Homer is the best spy out there and does so without raising any suspicions.
Any of you involved in any illegal activity?
But if there's one person in Moe's bar who's ever been involved with illegal activity, it's Homer himself.
You mean like the time you was running moonshine out of your basement?
Or that telemarketing scam you pulled?
Now, Homer is not interested in hearing anything about himself. He just wants to know if his friends have ever done something that crossed the line, but can't stop himself from claiming he beat up George Bush once, which eventually leads to a confession he's looking for.
Why stop there, Homer? My militia has a secret plan to beat up all sorts of government officials.
Now, with the transmitter the government has placed under Homer's shirt, they hear this and storm in to arrest Charlie.
You're under arrest for conspiracy.
Now, Homer thinks his service is over, but it was only just the beginning.
My superiors were pleased with your work. You have a flair for treachery.
There's an even bigger job ahead of Homer. You see, in the Simpsons timeline after the Second World War, President Harry S. Truman printed a $1 trillion bill to help reconstruct post-war Western Europe and enlisted someone to transport the bill. But that bill never arrived. What person was sent to deliver that bill?
Sir Montgomery Burns.
Now, the government has a conspiracy.
We believe Burns still has that bill hidden somewhere in his house.
And with their satellites, they were able to figure out that the bill is not on his roof, so Homer is sent to investigate. On a side note, surprisingly enough, The Simpsons seems to have predicted something yet again in this episode, which aired in 1998. The $1 trillion bill in The Simpsons doesn't actually exist. However, in 2011, a similar concept actually emerged during the United States debt ceiling crisis as a proposed way to bypass any necessity for the United States Congress to raise the country's borrowing limit through the minting of very high-value platinum coins. And in this case, it would be a $1 trillion coin. It would probably do more harm than good, though, which explains why only 14% of surveyed people were in favor of creating such a coin. So luckily, it was never created. What did exist was the Marshall Plan, which the $1 trillion bill is exemplifying. For those out of the loop, it was the American initiative enacted in 1948 to provide foreign aid to Western Europe. The plan wasn't paid for with a single bill, though. But does this bill still exist? Well, we see Homer ringing Burns' doorbell to get a peek around his house.
Now what, Smithers? Hey, you're not Smithers.
I'm Homer Simpson.
Homer gets in the house and searches for the money.
Starting search for $1 trillion bill.
Sadly, his efforts are in vain and Burns notices Homer's behavior.
What is this? What are you doing?
It's then Burns sees through Homer's plan.
Oh, I get it. I'm on to you. You're from Collier's magazine, aren't you?
But he thinks Homer is there to put him into his magazine, so he gives him a house tour until Homer spots a statue.
Hey, that guy looks like you.
Burns explains it commemorates his efforts to liberate $1 trillion that would have been foolishly squandered. Burns reveals the $1 trillion bill the statue has is actually fake. He keeps the real bill as close as he can.
I keep the real bill right here.
And that is all the government needed to know before storming in.
What the?
Montgomery Burns, you're under arrest for grand larceny.
But Burns is not the one committing grand larceny.
I'm not the thief. The government is.
He delivers a heartfelt speech about how hard-working Joes pay income taxes to pay for aid to ungrateful foreigners and nuclear missiles, all for nothing. It's a speech that really moves Homer, coming to a new realization.
Hey, he's right.
Homer knocks out the guards and flees together with Burns. I won't bore you with the details. They flee to Cuba only for the $1 trillion to be taken by none other than Fidel Castro.
I think we can trust the president of Cuba.
Now give it back.
Give what back?
During the episode, The Simpsons showed us a lot of the problems with the American tax system, but they never answered the question we all have at this moment. How do I commit tax fraud and get away with it? Well, you don't. You don't commit tax fraud. You just avoid taxes. But how? Well, it once again depends on your situation. For legal reasons, I'm not an accountant, nor should you take financial advice from a YouTuber that makes Simpsons videos. To be honest, if you do, that's on you. But hypothetically speaking, imagine you're a business owner. How do you get your tax rate as low as Jeff Bezos? Well, you can set up an offshore company in a tax haven. Think Cayman Islands, Panama, somewhere sunny where tax laws are more like guidelines. Route your profits through there, and you're suddenly enjoying no-tax beaches on your balance sheets. Imagine you have a bakery that's profiting about $100,000 a year, but what is that? You've sold your recipe to an offshore company and have to pay them $80,000 a year to use it. Now your company is only profiting $20,000 a year, but some offshore company is profiting $80,000 a year of that recipe. Then, don't forget about making generous contributions to political campaigns. It's amazing how political friendships can benefit you in, say, tax policy adjustments. Who knew? Oh, and if they don't listen, simply leave the country, which is exactly what's happening in Norway. They increased the wealth tax to 1.1%, expected to bring in an additional $146 million in tax revenue. Instead, individuals with a combined net worth of $54 billion left the country, and it led to a $594 million loss in tax revenue, a net decrease of $448 million. Small round of applause. But if you're sticking around in your country, funnel your earnings into R&D credits, depreciate your assets like crazy, and make sure your business meals look more like a Michelin tasting menu. Throw in a loan from yourself here and there, just for good measure. What if you don't have a company? Don't worry, there are still loopholes. Let's talk about art. Art isn't just for museums and collectors. It's also a hidden gem for tax breaks. Here's how it works. Let's say you buy a painting or sculpture from a talented but relatively unknown artist for $100,000. Yeah, that's a big sum, and it's way above what their usual work sells for, but that's part of the strategy. Once you own the piece, you get it appraised, and wouldn't you know it, this exclusive rare painting is now valued at $200,000 or more thanks to its unique artistic merit. Then you donate the painting to a museum or a charitable foundation, writing off the appraised value of $200,000 on your taxes, as a write-off is based on its current market value. Or, if you're into collecting, you can defer taxes by exchanging pieces through something called a 1031 exchange, essentially swapping art without triggering a tax bill. This way, your art collection grows, your tax obligations shrink, and suddenly, you're sitting on valuable assets that don't require big checks to the IRS. Alright, one last example for good measure, which doesn't require a company either. Imagine you're sitting on a good amount of wealth in stocks. Instead of selling shares, which would incur a capital gains tax, you just take out a loan against the value of your stocks. Not only do you avoid paying taxes, but you also get to keep your investments and benefit from any future gains. Plus, the interest on the loan might even be deductible. Just remember, all these strategies take legal teams, expensive advisors, and lots of paperwork. Not some random advice from a Simpsons YouTuber. But hey, if the super rich can master the art of tax avoidance, maybe we can learn a thing or two.